Hi. Welcome back, everybody. Frank Napolitano's here from MortgageBrokersOttawa.com.
Morning.
I thought rates weren't going to go up, but apparently they are.
Well, prime rate, right? And everybody associates rates with the Bank of Canada prime, but, you know, and we've said it many times, where prime hasn't changed since, I think, September of 2010, and yet here we are into almost March of 2012,
Yeah.
and yet fixed rates have been a yo-yo since that time. So where prime rate is not expected to change, and actually, you know, it seems like we might go another year, maybe as much as 2 years with no changes in prime, which is great for customers that have the variable rate mortgages. And I still get lots of calls, Frank, should I convert it? Why would you convert it when and a lot of customers have the prime minus a half, prime minus 3/4. You're 2.25%, 2.5%, then you're probably going to stay at that rate for the next year, maybe 2 years. So leave that one the way it is. But where we're seeing that we think there's going to be some changes is the bond markets have spiked over the last 2 weeks, and typically that signals fixed rates to go up. So.
Really?
So that's where we're going to see some.
A little bit
Nothing
of
major.
No,
nothing major. Again, we're going to see the 10, 15, 20 basis points. So we're a 5-year mortgage. If you remember, Bank of Montreal had the promotion about a month ago, a 5-year 2.99. Now 5 years is going to be in the 3.29 to 3.39 range. So
gotcha. Now, when the rates go low, the banks make less money. Although they make adjustments for that, right?
I don't know about that. I mean, if you look at where the spread is now, it's no different than where the spread was 4 or 5 years ago, where the rates were higher, but the bond markets were higher. So, and actually, some people will tell you the spread's a little bit higher right now.
Oh,
and the
really?
banks could be a little lower.
Well,
they're not.
They're making some extra dough because they're making it tougher to borrow for an investment property, right?
Well, they're making it a little bit tougher, and I think the rules are tightening everywhere, because what everybody doesn't want is for the government to get involved and tighten rules a little bit more on the mortgage financing, because that could signal some problems within the economy then and slow down the housing market. And I believe that the housing market is one of the things that's kept our economy rolling the way it has. And even though 4 years ago, we hit that proverbial recession, or we were supposed to be in a recession, we haven't seen it in the housing market. And one of the reasons is that the interest rates have been good, and the rules have been left pretty well untouched, with the exception of some changes over the last few years. So, what they're doing with investment properties is something that was around 15, 20 years ago, where if you bought your house, you got a discounted mortgage rate. If you bought an investment property, the same discount didn't apply, because as far as the bank's concerned, there is a little bit more risk on an investment property. So what we're starting to see now is that they're tightening up on some of the rules on investment properties. And more importantly, they're not giving you that same discounted rate. So they're bonusing it up by 1/4 point. So if you can get 3.19 on a 5-year fixed, on a owner-occupied, it would be 1/4% more for that. So 3.44 for a 5-year.
Which is not a huge difference. It is a difference, but it's not huge.
Correct. And I still have customers say, Frank, should I take the variable on an investment property? I'm kind of mixed on the variable on the investment property. I think an investment property has a fixed rent that's coming in for you, and if you plan on keeping it for 5 years, take a 5-year mortgage, and even a 10-year mortgage today is 3.89. So you can take a long-term mortgage and not really have that fear that you're going to look back and say, oh my God, I'm paying too much on my mortgage, because realistically the rates are historic lows right now. Yeah,
and your rent's not going to get any cheaper.
Well, your rent's not going to get cheaper. If anything, it sounds like all the other expenses that go on around rent are going to get more expensive. But again, you're limited with your rent increases too. So getting that fixed mortgage in place.
So you know where you stand.
You know where you stand.
For 5 years.
Yep.
If you decide that's how long you're going to keep that property, without changing rents or anything like that, then that's what you decide.
Correct. And you've got your fixed costs in place then.
Yeah. I mean, you can't go wrong, let's face it, with real estate. You cannot go wrong.
I don't think so. I mean, it's certainly been proven over the last 45, 50 years, especially in Ottawa.
Yeah.
How's especially in Ottawa. Everything is great. It feels like spring market. I mean, right now there's a lot of activity going on within the housing community. So good to see.
And we've got warm temperatures.
We've got decent. Feels like March.
We're turning the corner.
Feels like March.
I hate to say it, but I feel like we're turning the corner here.
I think so too. And again, don't panic over these little 10, 15, 20 basis point increases, because I think they're temporary, and I think we'll start, rates will level off.
Excellent.
So,
Frank Napolitano with MortgageBrokersOttawa.com. If you've got questions along those lines, they're professionals at MortgageBrokersOttawa.com can help you out. I saw your sign in Manotick the other day.
Right. It's there. Nice.
All right, there's a look at ski conditions all over the place. Mont Cascade, Calibo, you Camp Fortune, Ski Village. Get your skiing in while you can.
Not much snow left, I can't imagine.
No, we haven't had a whole lot of snow anyway.
Not after this week.
No. We'll take a break, be back with a news update and more here on CTV Morning Live.